What's up, everyone? It's Caddy with Money Investing, and the Fed meeting is now underway. Today is the beginning of the FOMC meeting, and of course, tomorrow we've got the Fed meeting and the speech, the press conference at 2:30 p.m. Eastern, not to mention the statement from the Federal Reserve at 2 p.m. Eastern. In this video, I wanted to break down the expectations for tomorrow and go over some of the other economists and analysts and what they are expecting from the Federal Reserve, and really the focus is going to be on the tone of Jerome Powell, right? How is he addressing the media? And of course, the guidance, the path forward is what the market's really going to be paying attention to. On Monday, we saw the markets trade sideways. Pre-market today, as of the time of this recording, we are mostly trading sideways as well. There's really not a lot of action in the markets at the moment because of the anticipation of tomorrow's Fed meeting. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas. We've got a little bit over 3,700 members from pretty much all over the world talking about fundamental analysis, technical analysis, macroeconomics, and stocks and options as well. So it's a really, really tight-knit and well-connected community if you want to access and of course be a part of our money investing team here. So link's going to be down below if you're interested in joining. So first things first, let's talk about the Federal Reserve. Again, the meeting begins today. It is underway on May 2nd, Tuesday. Tomorrow is when we will learn more about the interest rate hike. But first, I want to talk about how we are really waiting. How are the bulls and the bears really waiting? This meme always cracks me up, as the bulls and the bears are simply just waiting at the lunch table, just waiting for the decision. And after that, of course, we're going to see one overpower the other. Another really funny meme that I want to address to kind of enlighten the mood a little bit is going to be this one. This one is super funny for me. It always cracks me up. And in this one, you said no more rate hikes, and this one is just like, actually I said no more rate hikes. So that's true. I mean, Federal Reserve is expected to raise rates by another 25 basis points tomorrow. That's what the market is pricing in at the moment. But before we get there, economists and Wall Street traders will be more interested in what the Fed Chair and Jerome Powell signal in a statement and at the news conference about the bigger question, what comes next. And on that note, they may be disappointed, right? So there's an analyst, so Derek Tang, economist at LH Meyer, an economic consulting firm, says that they might be disappointed about the future. And even Morgan Stanley's Mike Wilson, who we know is a bit of a bear right now, is also suggesting that the market might be disappointed after what Jay Powell has to say tomorrow. But the real question, like I said, is going to be what comes next. What is going to happen? Not tomorrow, but in the months to come in the second, third, fourth quarter. And are we going to see more rate hikes or not? Can we expect a hike and hold, or are we expecting hike and hike, or are we expecting a hike and a cut? Because the market right now is expecting hike, hold, and cut. And it's really going to come down to what that future expectations and future guidance is going to be, which is what's going to drive the markets at the end of the day. So economists say Powell will likely hint that the Fed is edging closer to a long-awaited pause in its rate increases, yet he won't necessarily send a clear sign this week's hike will be the Fed's last. Instead, he will probably stress that further rate hikes could happen if inflation were to stay persistently high, well above the Fed's 2% target. He wants to kind of tell the market, don't relax, don't be complacent, and we could still hike more if we think we need to, but we don't know if we have to yet. I think that's kind of like walking that fine line between making sure the markets don't feel too optimistic, but then also not crushing expectations and hopes of the market of a potential rate cut or a pause. So it's kind of like walking that fine line is what Jerome Powell is most likely going to adopt. Even if Powell strongly suggests that the Federal Reserve will pause its hike after this week, he will likely emphasize that the Fed doesn't expect to cut rates anytime this year, something that we have talked about in our previous video. And Jerome Powell literally mentioned it not once but twice in the last FOMC meeting on March 22nd, that rate hikes are not part of their base case. Now, since then, we have seen inflation come down, but we've also seen First Republic Bank absolutely get demolished and be acquired by JP Morgan. So this banking crisis is only accelerating. So we might see a bit of a change in that tone. I'm sure there's going to be questions around First Republic Bank and how this, banking crisis is only accelerating for the worse. And for those reasons, it's possible that Jay Powell may consider putting that back on the table. Again, we're going to find out soon enough, but I think the probability for a pause is definitely a lot higher than the probability for a cut in tomorrow's speech. Another quarter point rate increase on Wednesday would have the Fed's key target at 5.1%, a 16-year high, and a full 5 percentage points higher than in March of 2022. Morgan Stanley's Mike Wilson also mentions that more hawkish Fed could hurt stocks this week, and we already got to take this with a grain of salt because he is mostly bearish on the markets, at least what we have seen in 2022 and 2023. And he says, and I quote, "We believe that equities are priced for an optimistic policy outcome." I would agree with him there because, yes, the markets are pricing in a significant amount of cuts in 2023 and 2024, which we'll talk about in just a minute. But and that's also without the growth downside. If the message delivered at this meeting is more hawkish, it could provide a near-term negative surprise for equities, and kind of that negative surprise being the reality setting in, or kind of like a wake-up call for the market that we are slightly a little bit optimistic on these potential rate cuts. And the driving force behind this resiliency in earnings revisions breadth is the expectation that an upward inflection in the second half of 23 and 24 EPS growth will come to fruition. It's also rooted in the view that companies broadly have already right-sized expenses and that margin expansion can now take hold. We respectfully disagree with that assertion, as it runs counter to our earnings models and our negative operating leverage thesis at the moment is what they're suggesting. So this right here is what the market's pricing in. 25 basis points, pretty much locked and loaded, 95.5% probability for that to happen tomorrow, which I think is going to happen also. And then there are going to be some hints for a potential pause, but I don't think that Jerome Powell is going to talk about rate cuts just yet, even though the market's pricing in at least 2 rate cuts, once in November and then once in December, getting that policy rate down to 4.5 to 4.75%, and then another 6 rate cuts, 1, 2, 3, 4, 5, 6, all the way down to 3 to 3.25%. So I think, situation from a more economic landscape are very, very susceptible to change. Things can change in a snapshot here, in a blink of an eye. They can literally just flip, and we've kind of noticed that, right? So last year, up until January, December of 21, Fed was very much talking about transitory inflation and kind of saying that we're not even thinking about raising interest rates. So they can switch very quickly. And then they, of course, marched on this path to raising rates to a 16-year high, and probably the most aggressive policy, we've ever seen. So take it with a grain of salt. Market's pricing in right now a very optimistic scenario of 7 to 8 rate cuts over the next 12 to 14 months. And at some point, we're going to have to deal with that reality, whether the markets are right or whether the Federal Reserve, Jerome Powell, is going to stick to their guidance of making sure that interest rates are going higher and they're staying higher for longer until inflation comes down. Of course, we've found many people that have been very vocal about inflation already being at 2%, if not straight up in deflation, with Elon Musk, Kathy Wood, Jeremy Siegel, Tom from Fundstrat. They've all been very vocal in kind of suggesting that inflation is already down and it's on the way down, and it's coming down to levels very consistent with the Fed's target. But of course, time will tell. The bottom line is the best way to position in this type of environment that there's a lot of uncertainty is really to be more of a trader, take advantage of the volatility as opposed to anything else. But of course, if you do find opportunities and you do find stocks coming down to your intrinsic value, take advantage of them, because eventually we do know when things start to stabilize, when growth rates once again start accelerating, inflation's back under control, and the Federal Reserve is a little bit more accommodating to the market, we know what's going to happen, right? The markets have consistently moved all the way to the top right of the screen, and that's where they are potentially going to also head into over the long term. Of course, short term, there's still going to be more volatility for us to deal with. So hope you guys enjoyed this video and a quick update on what to expect. We are still in that bear camp for both the S&P and the NASDAQ, so it's going to be quite interesting where we go from here. And today, of course, we'll see whether we get a breakout, rejection, consolidation sideways, a little bit of indecision, but then tomorrow, 2:30 p.m. Eastern, is going to be live and ready for Jerome Powell and the statement that they have for us. So as always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining us. Of course, getting access to all the binds alerts, options alerts. The first week of the month is usually the best time to join. Link's going to be down below as always. Happy investing. I'll see you all in the next video.